Hello and welcome to today's NinjaTrader ecosystem event, Uncover Hidden Market Structure with Ted Hearne of Drummond Geometry. My name is Thomas and I'm a platform representative here at NinjaTrader. Now, before we start the webinar, I have a few housekeeping notes. Now, this webinar is presented by NinjaTrader LLC, which is a technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage team. And if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader demo with real-time market data. Our platform is always free for advanced charting, strategy back testing, and trade simulation. You can get your free demo account by clicking the link on the screen. And before I turn the mic over to Ted, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative for future results. And please remember that these trading sessions are not solicitation or recommendation, but simply educational in nature. And again, thank you for your time today for joining us. And without further ado, it's my pleasure to welcome to NinjaTrader webinar room, Ted.
Okay, welcome everybody. I'm glad to be here. I'm glad to introduce you to Drummond Geometry. This is a quick overview we're going to talk about today. There's a lot to this methodology, and so be no way we could get through it in half an hour. But let's say, first a word about me. I'm a trader, a Forex and futures trader mostly. I've been trading for 40 years. I currently live in Indiana. I have lived in Michigan and Chicago. Was in Chicago for 40 years, a little bit of that time on the floor, but not much, doing other things too. I also had the experience of living in China for a couple of years, which was tremendously helpful to me in understanding the world, understanding a lot of other things. So it's my background. I worked as a consultant in mass communications for a large number of years for a major foundation. And in that role, we were deeply interested in the psychology of large numbers of people for purposes of health and environmental change and international security and a lot of other things. So I got pretty deep into mob psychology or mass psychology, and that led me into trading. And that led me eventually, after stumbling here and there, to Charlie Drummond. Charlie's a very interesting person, a very interesting character. He's Canadian. He lives up in Nova Scotia at the moment. He's in his mid-80s, so he's in full retirement. Charlie is not exactly a recluse, but he certainly doesn't have any interest in public exposure, except that he likes to tinker in the markets, and he's come up with some very interesting things. Long experience as a trader. He was trading in the 50s. He's a very productive guy. He's written 9 books. Charlie and I co-authored the lessons, we call them the 30 lessons, which is an elaborate and interesting investigation into the principles of trading that we use. These methods are somewhat closely held. We don't spread them on every doorstep. There's non-disclosures involved. We do reveal everything we teach in detail, including formulas, to our students, but they're under non-disclosure as well. And Charlie and I have developed software. Some of it's we regard as innovative. It's all very helpful. So what is this method? It's logical, it's objective, it's well tested. Over 40 years of market experience goes into this. Hundreds and hundreds of traders on almost every continent. I don't know about Antarctica. It's a group of simple technical tools, simple technical analysis tools that can be applied to any market and any time period to help you uncover market action. It's self-contained. It's built out of useful components that are common technical concepts. but applied in unique ways and includes some very unique insights in the way they're applied. So the problem of trading, all traders' dilemma, really, you have to look at this chaotic market and say, what is going on right now? And then you really want to know what's going to happen next. We can all see behind us. We want to look at the road coming up and the curves and the stop signs and the green lights and so forth. The big question is what's going to happen next? And in today's market, volatility is a big topic. How do I handle market volatility? Sudden moves, large moves, seemingly unexpected moves. How do we handle them? They're simple questions, but they're hard to answer. And the reason they're hard to answer is because we never know enough to know the answer. It's impossible to know enough. And why is that impossible? It's because we cannot get into the mind of every trader in the world. And in these days, a single individual, a single decision taken in private in somebody's mind is enough to move the markets if they have enough capital behind them. So we will never know. We will never know the answer. Our solution to this problem is to take invisible market structure and make it visible. So we derive the structure of the market, and we'll talk about that. And then we put it into the near-term future where we can see it and see the price action move forward into the structure. And when we can do that, we have a leg up. And we can use it in our trading, and we can use it to make rational, logical decisions with some high probabilities. So these elements, the basic elements, what are we talking about here? These are short-term trend lines, they're moving averages, a definition of a clear definition of trend and congestion differently, the state of the market. It's not just trend and congestion, but congestion entrance, congestion action, congestion exit, and so forth. And then very, very importantly, we coordinate time periods. We can coordinate structure in different time periods, support and resistance in different time periods, and look for synergy between these. So the methodology, it can be trend following. It can also be congestion action or congestion entrance. It will help you make better trade selections. And all of our tools are available on the future bar. In other words, the bar that has not yet appeared. So tomorrow's space on the chart, not today's, or the next hour, or the next 5 minutes, not the current one. Now, it's not just the tools, but traders are all different. And they're wildly different, really. If you talk to as many as I have, they're different in the amount of capital they have in their pocket or to play with, their experience, their age, their degree of precision that they like, whether they're cowboys or whether they're accountants. There's a lot of different in the way people approach the market, and that's the way it should be, really. It'll also accommodate any time frame from minutes, or really I should say ticks, to years, and any market. I always say that if it's a freely traded market, any kind of market will work with this. If it's a freely traded market and you can get price data. This could be the arms bazaar in Kazakhstan, for that matter, because it will respond to human psychology just the way the S&P will. So today we're going to give you a little overview of these tools, and we're going to take a look at our NinjaTrader software. So to begin, we have something called the PL dot. The PL dot means point and line dot, but we don't never use that anymore. We just call it the PL dot. And an envelope system that's derived from that, and then a zone system which expands on that. So these are the basic moving averages that we're interested in. And to take a look at the PL dot first, the point and line dot, or just the PL dot. We talk about this as an expression of energy. We're big on talking about market moves and price action as a reflection of energy, because that's really what it is. It's people taking action in the markets with capital, and that's a form of energy. It expresses the collective energy of 3 bars. So it's a short-term, 3-period moving average that collects the energy of all those 3 bars. It's a sensitive short-term average. It quickly shifts from going across the page in when it indicates, and then quickly reverting into a straight line up or down. Now, so it quickly responds. It's very responsive. Now we're dealing with crowd energy. When I was living in China, I had my eyes opened about what crowds mean. I have never experienced, I lived in Shanghai, it's like 22 million or 27 million or God knows how many people. It's a very, very large city. And it just gave me a new insight into the amount of people in the world and the way crowds react and crowds deal with each other. It's insane, really. It's just quite remarkable. I could walk out of my apartment in Shanghai and there'd be thousands of people on the street. I walk out of my house in northwestern Indiana, and I'll be lucky if I see 2 or 3 people in the neighborhood out in the street. The subways, good Lord. It's a very, very different situation when you're thinking about crowd psychology, and you can experience crowds like this all the time, every day. So let's go back to this PL dot and look. See, now here's the 3 bars, okay? So we say this is expressing the collective energy of the 3 bars. 1, 2, 3, not hard to see, but it is projected forward onto the next bar. So these 3 bars, the energy in these 3 bars is developed and plotted on the next bar. When in the days of hand charting, when we were still doing this with hand charting, we plotted it between the 2 bars, but that's a little difficult to do with current technology. So we plotted it on top of the next bar. That's why our bars look a little fatter, because we like to plot things on top of them. So so we plot. Let me get my pointer up here. We plot on the top of the bar. That's why our bars are a little thicker. Okay, so what do we mean by collecting the energy? Well, this is the average of the high, low, and close of the last 3 bars projected onto the next bar. Now, there's a formula for it. It's easily figured out. It's not really complex. So it's any 3 bars, 1, 2, 3, moved over to this. Now you see how this strong bar here is pulling this dot down. This average is down. It's steepening the slope and turning this into a widely spaced trend. So we measure the distance between dots. We measure the slope. We measure the degree of whether it's going up or down or sideways, and all of these mean things for us. A sideways market, like down in here, is a congestion market, and the congestion markets, the dots go nicely in almost a straight line right across the page. And when they're in a steeper movement, they move up and down. We have a metaphor that we use in the markets. In a trend, we say it's a dot push. The dots, we can imagine the dots are pushing up, pushing up, pushing up. We envision these as having a lot of energy and pushing, pushing, pushing. In that case, we frequently find that the retracement will come back down to where the next bar is going to be, the next dot is going to be. Similarly, on a declining trend, we see push, 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 push to the downside. It's a metaphor because dots don't actually push. They're a reflection of collective energy projected forward, but it's a useful metaphor for us when we're trading. Similarly, there's the counter movement from what we call dot refresh. And the principle is when price is a long way away from the PL dot, it will try and return. So here it is a long way away from the PL dots and it returns. So the price goes up to there, and then it returns to where the dot levels are, up to here, and it returns to where the dot levels are. We call this a dot refresh. You know, it's similar to reversion to the mean, but the mean is a little different here. Then we take this PL dot and we chart it, and we expand it, and we derive an envelope from the dot. And now we have a matrix of indicators. And this lets us measure change against a constant, but the constant is also in motion. So it's a change against the constant. The constant is always there. It's always the same relative values, not the same distance, but the same relative values. And as it moves, it responds appropriately to the market in terms of the support and resistance levels. So we call this the envelope top and the envelope top and envelope bottom. It's not hard to figure out. The PL dot, the envelope top, envelope bottom, that's our envelope system. Now, when I say we measure change against a constant, we have something called a C wave that we picked up the term from oceanography, a big wave that breaks. What we're really talking about here is the ability of the price to break through the top of the envelope. When it breaks through the top on a sustained basis, like this bar, this bar, this bar, it is a C wave, just a term that we use. It's a way of measuring, it's a way of expressing what we mean when we say there's strong energy that breaks through the top of the matrix of the envelope top. You see, I've added the top and bottom channels here. Again, this is an effort to measure change against a constant. You notice that when we have a C wave and it breaks through the top of the envelope and goes up and higher into the zones above it, the market will work very, very hard to go back into the side, into the channels once it reaches these higher levels. We have terminology for this, you know, below everything is called the outer darkness, above everything is called the outer darkness, but the zones are called 1, 2, 3, 4, 5, 6. Very original, right? But it gives us a frame of reference so we can talk to each other and know exactly what we mean. So we say price on this this bar right here, we say price closed right at the envelope bottom, or on this long bar here, we say, boy, it broke through the bottom of zone 1 out into the outer darkness. Well, that's a sign that at the end it's an exhaust, really. It's going to start moving sideways. So okay, I'm going to have to speed up here and move along. So I'm just going to start flying. You know, energy of the markets is similar to hand-to-hand combat. Then we also add short-term trend lines here to help us define support and resistance. There are many different varieties of these, but this line, for example, starts at the bottom, goes to the top, and ends up at the top. And that is actually a resistance area, and we would know that ahead of the bar being formed. There are a lot of different varieties of these short-term short-term trend lines, but the problem is obvious because it messes up the chart and makes it unreadable. And so our solution is to group these according to the market state. In other words, in a trend, the nearby, all these short-term indicators of support and resistance would be located here, and in the downtrend, they'd be located there. So it helps us define trends and congestions and what the support and resistance matrix is. We have very clear definitions of trend and congestion. A trend is 3 closes on the same side of the dot. Congestion is when the dots, the PL dot and the closes are on each other side. So this system works in any given time frame, any single time frame. But there's another whole dimension to this, which is tremendously helpful. Imagine prices going down here, and you know that this white line is here ahead of time, and you know that's going to be support, then that's a tremendous buying opportunity, and you can see that. So everything is always projected into the future bar. You see, there's today's bar and there's the future bar. We see where support and resistance is. We see how it's moving forward. So our object is to harvest the majority of a given bar. So here we have weekly white bars showing you the range, then pardon me, monthly white bars showing you the number of the daily bars that are in between. So our object is, if we're trying to trade a monthly bar, we're trying to capture as much of this space as we can. So we harvest a bar. We monitor the unfolding of that monthly bar as it develops, and we look towards harvesting that. So time period coordinations can be any series. We try and do it in groups of maybe 5, 6 smaller bars inside a higher time period bar. Let's look at something about how this might be structured. So this is a monthly envelope. The monthly envelope without any price bars on it. And this is a weekly envelope laid on top of that. And you can see how it goes above there and back down and up and then down. So, okay. Now we add the daily envelope, and you begin to see how these time frames can oscillate within each other and provide support and resistance for each other. Here again is that monthly bar when the price bar comes down here and stops at that monthly support, which we know is there. So if we add in price bars now, and this might be how we would be looking at the chart, we can see this is a strong C wave up on the weekly and monthly, but it reaches an exhaust and it's going sideways. It comes back. This is essentially a monthly dot refresh, comes down to the monthly PL dot and takes off again, comes down again, goes as far as the weekly envelope bottom. It's another area of support. Goes up again, comes back down, monthly envelope bottom, up the monthly envelope top. And now when it breaks, we have indicators that tell us why and how the support is breaking, comes down into an exhaust way below the monthly envelope bottom. So in NinjaTrader, we have new software for NinjaTrader. We like it very much. It can accommodate any time frame. The overlays are handled very easily and very beautifully. The graphics and the display flexibility in Microsoft is terrific. In NinjaTrader, it has a terrific capacity for adding multiple indicators in other ways. We can put a lot of layers on the chart, and it accommodates it greatly. And the automation tools in Ninja are very interesting, so that we're able to customize trade alerts and that kind of thing very nicely. Now, lately, we've been digging into some new software. We call it the energy bands. There's an element to this also called EODM, which is a arcane little algorithm name we've come up. It really stands for easy on the eyes and mind, if you pardon our parochialism here of having a strange name, because we wanted to be able to create an indicator that would help us make quick decisions and not require a lot of thinking. We could look at it and see. Then there's an element of EODM called the spike that shows consensus expectation, and another one that's we call the walls, which show extremes. So the energy band software on NinjaTrader would look like this. You see the familiar channel system, and these are the higher time period overlays you see below it, but the graphics are very nice. Now, EODM is these overlays here, this row of dots, the little bars there, and also the green bars that we're laying on top of the price bars. So this would be an outer resistance. So the market would very rarely go above this or below this. It does it sometimes, but it wants to come back inside when it does quickly. This we call the wall, or sometimes we call this ducks in a row. It's the oncoming. The spike is this green line. And what these are a series of calculations that draw two bars into the future and bring it back to the current bar. So we're looking further into the future than we've been able to do before. There's a large number of calculations, a large number of hundreds and hundreds and hundreds of calculations that go into the all possible methods of forecasting support and resistance, concatenating them, massaging them, and bringing them back to display on the current bar. So let's see and then we monitor this on the lower time period. So here we have a higher time period on the left and a lower time period on the right. So this spike, for example, this little green bar here, we would chart this on the lower time period as these two white bars. And then what we do is we watch within the area of the spike to see, is the market pushing up or not? At this moment in time, is this green bar holding or is it not? Now, we've just seen one break in the prior bar, and then it's beginning to hold now. You can see it as this develops. It's very, very helpful to have that advanced warning. Remember, all of this is visible in the future. We can see it before it happens. And then we see price moving into these areas of support and resistance. And this permits us to make good decisions. So we've looked at some short-term moving averages and our short-term trend lines kind of quickly because the time is short. We looked at our trend and congestion definitions. We're said that time period coordination is very, very important. We've seen that it's neither a trend following system nor a congestion action system, but it accommodates both congestion and trend equally. Most importantly, it puts a matrix of tools on the future bar. This is not back-looking stuff. This is on the future. We're always moving into the future. A lot of different kinds of trades plans can be generated out of this. We have a lot of different trade plans. All kinds of traders, whether you're intraday, auto traders, you're trying to bang, 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 or you're day traders or scalpers. We like swing traders very much, position traders, investors. If you're into options, it's all about direction. We're all about direction. We'll help you figure out the direction so you can play your options. So the goal is a perfect technical analysis and optimal trader psychology. We put a lot of emphasis on psychology. We try and generate non-ambiguous signals, yes or no trading decisions. You know, is the market doing this or is it doing that? Look at this and you'll know. So the computer does what it does best and traders do what they do best. So perfect technical analysis and optimal trading psychology. So, you know, trading is tough because if you don't know what's happening, you can get scared. And if you're scared, you freeze. That's no good. Fear is the product of an undisciplined mind. Drummond is a very disciplined approach, and it can go a long, long, long way to eliminating fear from trading so that you're able to trade in an easy, relaxed, confident manner. So we have education programs. There is short course of the master class is a big 30 lessons, a major master class of trading. Advanced seminars, internet meetups, and so forth. The entry point is our in-one lesson short course. It's our silver level. And we have an offer today for you good people who have watched me through this. 10% off any order from drummondgeometry.com. Now, were you to buy the whole package, you'd save $600. So it's a good offer. And therefore, it's only good until November 15th. And there's a checkout code. You can see that. Checkout code of Ninja Seminar would bring that to you automatically. But we'd be glad to work with you. And we look forward to having you. And thank you very much for your time. Okay, I have some questions here on this chat window. Let me see what we got here. Yeah, we don't just, okay, Wayne asks, what kind of bar is that? I see on the close on the right, where's the open display? We don't display the open. And we don't feel it's necessary. And why don't we? Well, for one thing, we're monitoring on lower time periods. rather than overnight. And we generally deal with 24-hour markets. We don't plot the open. We don't find it that useful. Brad asks, is it different than a moving average channel with standard deviations? Yes, these are not standard deviations. They're based on support and resistance changes. So they're derived from a different principle. Some of the methods, some of the things that people learn when they're trading standard deviations can be applied to this. But we're a little different in that we don't mind when price goes outside of this, different lines within that channel, because again, we're monitoring change against a constant. And so if it exceeds a line that's a constant, we want to know that. We want to know how it does and with what energy it does, what that means. Okay, Judson says, yes, we do use it with the E-mini, with E-mini futures. We use it with all kinds of futures, with Forex. We use it with single stock trading, with indexes. We're all kinds of things. We're not going to do anything live in markets today. Can you get a 7-day free trial? No, we don't give a free trial. We have extensive material on the website that'll explain it in detail. And there is a free indicator for you on the website, a free membership that will get you the PL dot in the channel system. So you can look at that for free, and you can have that permanently for free. Web landing page for the market commentary. Well, we don't have a program of daily market commentary at the moment, but we're thinking of offering that in the near future. We think that we're going to have a group of advanced traders and those who want to be advanced traders to meet a couple times a week, and we have live back and forth then. Can you fully automate trading, for example, buy and sell based on your parameters? You can. The parameters are available for automation. We don't do that, but the tools can be used for that, and very effectively, I think. Does your scanner work as well in Ninja as TradeStation? I don't have a 100% reliable answer on that. I have it working in Ninja and it works fine. TradeStation has a very well-developed radar screen capacity that seems to work pretty well. So I haven't taken the NinjaTrader that far because I'm working on some other things. But NinjaTrader scanner is excellent, and we are able to program very specific support and resistance elements on that, so we can scan by markets that have reached an extreme, for example. How to get the discount? It's a checkout coupon on the checkout when you purchase. One time, so if you buy a small piece of the program and you use your discount on that, then you come back and buy a bigger piece, you're not going to be able to get the discount again. But if you buy the whole package, you can get the very large discount. So naturally, we'd like you to do that. Let's see, anything more? The coupon is Ninja Seminar. And it's on that last slide of the program. Let's go back. Let me see, go back one slide. If I can do that, let me see. Yeah. Can you see that? Checkout code Ninja Seminar. Let's see. What was the coupon? Okay, we showed that. So I guess we're done then, huh? Mr. Are you ever going to have a trade room like in the old days? Yeah, something similar. We're thinking about doing something similar. We've been doing a lot of infrastructure work and revamping the infrastructure to the software. So let's see. Oh, there we are. Skids Magoo has posted the landing page to this. You can see what that landing page is. That'll take you to make sure that you get the discount if you should buy something. But I can tell you that the website is filled with a lot of in-depth material is available on the website. If you go all the way through the website, you'll be picking up quite a bit of information, and you'll be able to make an informed trade decision and informed purchase decision. I think should be very helpful. More questions, maybe? Yeah, we do think that we're going to start a live trading group, a room. I guess we didn't call it a room. We thought it would be a group of advanced traders. There's our full link, and then the how does it work with the current volatility? Well, volatility is a very interesting topic. Everyone wants to trade high volatility markets, but maybe that's not such a good idea. There's also something that you can do to trade low volatility markets that can be very effective and with lower risk. But if you do have high volatility markets, the tools and the techniques and the channel systems accommodate that very, very well. And the big leg up that we have with Drummond is the time period coordination. Now, I showed you that slide in the middle where we had price coming down, the price bars coming down and hitting a monthly PL dot and bouncing right up off of that. Those are big bars going down to that, or volatile days leading up into that. But as a Drummond trader, you see where it's going. You see what lies ahead of it. You see that heavy support that the price is diving down towards. You see that the monthly bar is in an uptrend. You see that the likelihood of that support is apt to be strong. Therefore, you are ready for the price to bounce up off of that, and you're ready to take action. So it's very, very strong to have the time period coordination like that. Wayne asks, is it specific entry or more discretionary? Well, it can be specific entry and it can be discretionary. So depending on how you apply it, how you set it up, and we'll work with you to help you think this through. Remember, this has been in play for 40 years. And there are traders all over the world who've worked with this, many, many different markets in Australia, in England, and in all over Europe, in Russia, in China, in Taiwan, all over US and Canada and South America. There's traders who work with us everywhere, and they're all different. So a 25-year-old guy who's sitting on $30,000 in his trading account is going to approach things differently than a 70-year-old guy looking to do something with his 300,000 or 400,000 IRA. That's just different. Are we responsive to questions, tech issues on the learning videos? Yes. Yeah, we are. We're very responsive to our customers. So I'm reachable. My colleague Scott is reachable. We have ample support tools available. So we try very hard to have our traders be successful. And the reason is that if you're not successful, then it's not good for us. It's not good for you. It's not good for us. So we're all about success. Is the price difference mainly consist of getting all the tools in the gold? Big price difference between silver and gold. Yeah, that's true. The silver membership level contains the short course plus very powerful but basic tools. And the short course is maybe 10 hours, maybe less. It's a quick overview. You'll recognize it from this seminar. The gold membership level is a whole nother kettle of fish. It's the 30 lessons. It'll take you months to go through. It's very, very, very rich. And it has a huge pile of software that goes with it. So it's a big step. To learn this for one system like futures only is good, correct? Yes, we don't look at other things. This is something that's interesting. Are you saying do you need to have a lot of different systems in order to trade this? No, we don't. In our view, this is self-contained. I don't look at other things in particular, although I'm kind of aware of what's going on in the world. I can be reached at Ted at drummondgeometry.com, and I'd be happy to talk to you. Let's see. How are we doing, guys? Anything else that we can help you with? Daniel, all you want is one system. Well, yeah, that's right. It's one set of tools that, in my experience, I've been trading for 30 years and I've looked at a bunch of different things, but I've never found anything that was helpful as this. I was in market profile for quite a while, and I like Pete Sotomayor. I think he's a brilliant guy, and it's a very, very innovative tool. But I like this a little better because it gives me a better handle on the extremes. I have in the back of my head, I remember all the things I learned about market profile, but I don't have any tools of market profile that I use that adds to this. I'm kind of the more basic set of tools. Yes, where James says the basic set of tools. Yes, it's good. In the silver membership, that's a very, very powerful set of tools. I've used it for years and years and years. This style of charting, and it's carried me through a long time in the market. So I think it's very, very powerful and should be all you need to get started and for a long time. If you wanted to stop there, if you had the knowledge to apply it and didn't want to learn any more, the software would be great. But there's more. I've never heard of an indicator called medium. No visual. Well, we kind of ended the slideshow. We can go back up and pick up some visuals. It's okay. How are we doing on time, guys? Any other questions? Something we can do? Is there a way to upgrade to gold after silver without paying the full price for gold? Yes, you get full credit for the silver. Yeah, there's an upgrade price. Yes, definitely. So if you buy the silver membership, there's an upgrade price up to gold that takes into account the fact that you spent that. We don't want you to spend the money twice. How long do all the lessons take? Let's see, the 30 lessons I think you're talking about. Well, the fastest I've ever heard of anyone doing this was a surgeon who had broken a leg or broken his arm or something and couldn't work. And he was a smart, driven guy, and he went through the lessons in 6 weeks or so, full time. Many people go through them in a month or two, 3 months maybe, but they find that they want to go through it again. So it's very common to have people go through it 2 or 3 times. I have people who have come back to me after 10 years and said, I've taken this course 3 times. I keep on still getting stuff out of it. I'm taking it again. And I want to buy this software or that tool or whatever, but this is the greatest thing I've ever seen. So they like it. If I were doing it today, I wouldn't make it take quite so long, but it's an amazing piece of work. I'm happy we did it. The renewal field is for everyone. Yeah, the deal is that for many years we sold software and sold education as discrete packages, and that was it. And what we found is that a lot of our customers actually would buy the software and they'd use it for 20 years. And in the meantime, we'd have all kinds of software maintenance and so forth, and renewal and keeping it up and running and so forth that we had to do, and we never got paid for that. And so we have a small support, a small maintenance fee annually, and that's for everybody. And we have to do that because we need to maintain the software and maintain the platform. After buying gold, do you offer lifetime support? Yes, indeed, we do. And what do you most like about the software? Well, I think people appreciate the ability to coordinate timeframes, to have a clear view of support and resistance, to see things move into the future and see how you visualize the future, and to have a comprehensive methodology that explains what's happening. So you know what's happening. You know what's happening in the market. You can see it develop, and you can formulate your yes/no questions. The major philosophical difference between this and other systems. Well, it is based on a conception of energy flow between different segments of human groups. And we are, in our mind's eye, we're coordinating the flow of energy between different levels of resistance and support. It is very in tune with the way other energy flows in the universe work. Energy flows in physics, in biology. I see parallels in evolution. I see parallels in growth systems of all kinds, where energy will move into a new area and then explore that area, the top and the bottom, and kind of slosh around in there, and then overcome some obstacle and move into another new area, fresh area. So it's energy flow, and we have a way of charting that in human emotion and the human crowd emotion. Maintenance fee is understandable. Noticeable upgrade every year, some improvements. Yeah, well, we do. We improve things. Part of it's building the support library, building the graphic capabilities. We've introduced several new software things in the last 2 years. We have a system of alert software that is coming online. We have an indicator for alerts within the area structure that's incredibly useful. We can alert you when price goes into a certain area or when it exits a certain area. It's very, very helpful. So that's new. The main thing we use to determine support and resistance levels, it's a combination of 3 things, perhaps. Short-term trend lines, the short-term moving averages, the state of the market, meaning congestion, action, or trend, because this influences where support and resistance will be. Another element, the main element, or the main useful element, is to take these and then look for synergy between timeframes. So if you can identify daily resistance, and you know that that daily resistance is in a state of daily trend, and you see this within the framework of a weekly and monthly envelope or energy structure matrix, and that weekly and monthly chart is moving down, then you can have a strong guess that that daily resistance is strong and will hold and turn around and go down. Yes, there is some statistical analysis of the support and resistance lines holding. We have that. I'm not sure it's on the current website currently, But we did a bunch of statistical analysis some years ago and produced a little graph or a Excel spreadsheet showing what the percentages were. I can make that available to you. I don't know what those percentages were now, but they were positive. But it's not just on one time frame the support and resistance holding. That's interesting. It's useful. It's positive. It encourages you. But the real benefit comes when you can synchronize the support and resistance on multiple time frames at once, because it will multiply your win rate by an order of magnitude when you do that. James, what was the first markets I traded when I started trading? Well, I was always interested in gold because I used to fight with my father. I said, well, gold is always going to go up. And he would say, oh, no, it's just another commodity. It'll go up and down. And so I would acquire some physical gold and hoard it and think how wonderful that was. But then, so when I traded, I started trading that. When I became a little more sophisticated, I traded the treasury bonds. I was on the floor in the Mid-Am exchange in Chicago for a while in the bond pit. So I've had an affection for that. Is the system hard to learn for someone relatively new to trading? Well, no, but you have to be serious about it, and you have to pay attention and listen carefully and not get distracted by a lot of other stuff. What time frame level is the time? What charting level is the time frame analysis in? Well, depends on the way you set up your charts. I have charts set up for yearly bars, for quarterly bars, for monthly bars, for weekly bars, for daily bars, for 240 minutes, for 60 minutes, for 15 minutes, for 5 minutes. And then I go to ticks. I have depending on the market, anything from 100 ticks to 10,000. This chart that's on the screen right now is not in ticks, but in volume bars. So it's I guess that's a 10,000 volume bar. So it's very flexible. You can do it in many different time frames. Actually, we have 2.5 and 5 year bars, 2.5 year bars and 5 year bars, if we can get the data for it, because you can't just go back 2.5 years to get the bar. You have to go back 7 times that in order to get a decent envelope up and running that you can rely on. So not all markets are susceptible to really long-term charting because you can't get the data. But if you were to take something that's traded since 1900, like the Dow Jones, it's pretty interesting. How about scalping? 7, 25 ticks and 2 and 4 range chart. Well, it works on short time periods. So your scalping would be better. You'd have more success with your scalping if you had a sense of the market context that was going on about it. It does work on shorter time frames, but once you understand what we're up to, chances are pretty high you'd be lengthening your thinking a little bit. But I understand the interest. I've been fiddling lately with an auto trading program that would auto enter and exit according to our support and resistance zones, but it would only actuate when very certain. It would only actuate when the market was in a very particularly receptive state. So when I knew from a higher time period analysis that it was on its way down, and I knew where it was and what to expect. Will it save us from the upcoming market collapse? Oh, nothing will save us from the collapse. The upcoming market collapse will offer great opportunity for a sophisticated Drummond trader. the upcoming market collapse, should there be one, will offer great opportunity for a Drummond trader. On my website, you can find a chapter from a book I wrote, not a book I wrote, but a chapter in a book on technical analysis. I wrote the chapter that talks about Forex trading. And I started out by saying, what do you think you could do if you knew the Japanese market was going to be at a 20-year high in 1980? And I explained how that might happen, how you could see that and analyze it. We see it these days in Bitcoin and other things. There's huge volatility, but great opportunity. If you know what you're doing, you can take advantage of the volatility, and you do that by placing things within the context of a higher time frame. So a good Drummond trader doesn't fear volatility. He might fear that he'll lose his psychological balance, but not if he understands the time frame. So I came later as an offer to attendees. Yes, it is 10% off any one purchase. The coupon code is Ninja Seminar on checkout. So you can decide what you want to buy. If you buy the whole thing, there's a $600 benefit to that coupon. We're doing good. Anything else? Don't be shy. You got me here now. I'll answer your questions. Okay, it seems to me that Mr. Thomas says we want to wrap this up. I'm grateful to him and to NinjaTrader for the opportunity. I think NinjaTrader is very, very interesting software platform, and we intend to take full advantage of it. Very helpful. If you have more questions or you find things of interest, you can get to me at this address. There's an email address for you. And the website is drummondgeometry.com. And if you add a /ninja after that, it takes you to the landing page for the seminar. And we're pretty accessible. If you have questions, if you have problems, bring them to me and we'll see what we can do. Okay, it's been a great pleasure talking to you. Thank you, everybody. I think the questions were on point. You're clearly a sharp bunch of people. No flies on you guys. And thank you very much.
All right. Well, I want to thank Ted for taking the time to share with us today. If you enjoyed today's session, we hope you will join us in future webinars. We would like to remind you that the information provided was that of Drummond Geometry and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day. We hope to see you in future webinars. Happy trading from all of us here at NinjaTrader.